Good afternoon, everybody. Good afternoon. Um, can someone check in the YouTube if everything sounds good? I just feel like whenever I change something, in this case, I just got back to New York, things get messed up. But someone could check that. I would appreciate it. Otherwise, I'm going to get started. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is basically the same. Okay, I have a head cold, so bear with me on that. I apologize for it in advance. Also, tomorrow, after the close, I'm flying down to Charlotte. Similar to when I flew down to Dallas in July. I'm gonna be doing like a live afternoon meeting in Charlotte on Thursday at some sort of office space. So if anybody is in the Charlotte area and didn't get the invite, just shoot me an email and I can make sure you got the invite. But I'm not going to be around to do the afternoon meeting tomorrow. Brant is going to do it, which is great. But I don't think Brant's got the YouTube access. So if you tune in on the YouTube, then there's going to be no afternoon meeting for you. So it'll be exclusive to our team. All right, with those announcements over, let's jump in. The S&P, the SPYs here closed up about 0.25%. The Qs closed up 0.4%. The IWM closed small green, kind of flat. TLT was up, so interest rates were down. The dollar pulled back a little bit. So UPTF last week looked like it was going to break out, and now it's kind of back in the range, but we got to pay close attention to this. I still think that there's a potential of a dollar upside squeeze, and if that happens, it'll be a negative for equities. What else? Gold made new daily chart highs. I'm out of my gold long position, so it's making new highs now without me, but it was a great trade. What else? Bitcoin, great bounce back. Bitcoin up 5% today. Ethereum up 4% today. Solana up 7%. So the only reason I even look at crypto, honestly, is because of what we had discussed last week when it was crashing down, which is just one other additional area in the market where as everything becomes more intertwined and you have all these crypto ETFs, a sell down in crypto at a certain point could have a knockoff effect where it causes a sell down in the equity market if enough margin calls and things like that actually get triggered. Let's jump into today's price action. Let's review the game plan from the morning meeting and how it worked out and what it means for going forward. So we had a surprisingly large gap up this morning, as far as I'm concerned. Everything I was reading over the weekend seemed like primarily negative headlines, and yet we had a pretty big gap up this morning. I think some of that is attributed to Goldman Sachs. Goldman Sachs raised their year-end S&P target, and everything looks, bullish as it can be for most analysts out there, at least. I did note in the morning meeting today that while I have a lot of respect for like the flow of funds market dynamic data that we get from Goldman. They're one of my favorites in that regard. I have a tremendous amount of disrespect for upgrades, downgrades, and price targets that come from Goldman. They seem like they so consistently mark tops and bottoms. So I'm not overly concerned about Goldman coming in and raising their price target on the S&P today, but I think it is one of the reasons that you can attribute the market gap up to this morning. So turning things over to the daily chart technicals, and I'll go back to the 5 minute. What we said in the morning meeting today was if this market is going to build out some sort of a topping process, which is certainly an if, right? It's an if then statement. If that's what's going to be happening right now, after we actually had a little bit of selling last week, you need a lower high to come in, and you really need it to come in where we gapped up to this morning. So, yeah, you need it. I'm sorry, I'm just seeing what Tate just posted in the corner of my eye. You really need the market to have sold off from the opening high this morning. So if you look at that for a combined amount of reasons, right? Both small time frame and big time frame. Because of course we always want to work our way from the big picture down to the small picture. So big picture, eyeballing this gap up this morning after we put it in a low on Thursday. We closed off lows. Friday, I think was like a 0.5% up day as we rebounded further. And then this morning we gapped up like another 0.5% or whatever, probably a little bit more than that with the Nasdaq. That is where the market needs to create its lower high. So really, what you want it to see if you're trying to maintain any degree of bearish thought process of a technical topping process here is a lower high today. And ideally, you wanted to see us close weak. So we was pretty much saying all day, the game plan was there could be a positioning squeeze at the open, but once we get a real pivot high, you could look to be short versus that for at least some sort of corrective action in the small time frame. And then we can see what that turns into a little bit bigger picture. Basically, if we fully correct on the small time frame and then we find ourselves making new highs, we're looking like we are back into full on bull mode at this market. But if when we begin to get some corrective price action lower during the day today, we roll down, we can't bounce at our equilibrium area, and we close like unchanged or red, that would indicate more that we have this potential lower high in the market. So now at the end of the day here, it's a little bit unclear, to be honest. So you had an opening quick pivot in the first 5 minutes that you had a quick pullback off of, and it was very shallow in nature. The reason why it was shallow in nature is because the cues were just absolutely squeezing higher. The positioning squeeze that I mentioned that could happen in the morning meeting today was specific to the Nasdaq. We saw that once the market actually opened. The IWM, on the other hand, the RSP, the equal-weighted S&P, sold down really hard off of that gap. But the queue is just ripped higher, led by NVIDIA, led by AMD, led by basically anything that's in the AI trade. And you could very simply see that. So the positioning squeeze that I talked about as being a possibility this morning that you could look to short only happened in the Nasdaq. But the Nasdaq is where most of the largest market cap weighted stocks are. So that has an impact of being able to hold up the spies, which you can see were kind of sloppy, like strong but sloppy in the first hour of the day, versus the RSP, which is the equal-weighted S&P, got crushed all the way back down. Finally, we had this like positive Maribozu at 10:05. That positive Maribozu engulfing candle, whenever you get a candle like that, the opposite side of it's always really important. So it's like we're in full on bull mode here, very simply, especially when you're looking at the Qs and spies are pretty much the same again because of market cap weighting. The QQQE was stronger. I take QQE with a little bit of a grain of salt compared to the RSP, but you certainly want to pay attention to both. But it just established the 10:05 low as an important level. So what I was saying when I got off the virtual trading floor radio into 11 o'clock, and even in front of that, was if, again, we want to think about markets in terms of if-then statements, if we can get below that 10:05 low, then we could see a roll down. And, shortly after, when I was grabbing lunch and when Brent was on the radio, it's pretty much happened what happened. We lost the 10:05 low, and everything was kind of selling down together. And we were working our way by 1:30 here, almost unchanged for the spies. Then we got a little bit of a bounce back, but at 3 o'clock we were met with more selling, new lows, and we briefly, I think, ticked red by a couple pennies, or basically got to like exactly unchanged for the spies. And at this low, this is 662 is the price I was mentioning all day today. I was like, if we get a close at 662 or below, then I feel like I've got real confirmation that this market is trying to give us a lower high. And then the question is, can we break Thursday's low? If you ever break Thursday's low in this market, it'll mean, at least in the short run, a real technical structural change for the market. Remember, right now we've got equal lows. Equal lows we refer to as a challenged trend. An uptrend should be a pattern of higher highs and higher lows, right? Why is this not a higher low? Why is it an equal low? An equal low is not breaking the trend, but it's showing that the bulls weren't strong enough to give the higher low. So that's why we call it a challenged trend. So if now you could get a lower high, and then you break that 655, Then you have what looks like a little bit more of a technical topping process, and things are starting to look a bit different. So I really wanted to see if we could get that 662 or less close to confirm the potential lower high in the S&P. And we were looking good here for a moment at 310, 315. And then, of course, we ripped into the close. There was a huge MOC buy imbalance. I think it was $6 or $8 billion to buy that Pat mentioned. That, by the way, as most of you guys probably know, gets front run a little bit in front of it. So this was probably some front running of that large MOC that lifted us up, because when the MOC actually hit as big as it was, they down ticked us on that. That's because people knew it and they were front running it. So with where we closed, I would say it's a little bit inconclusive. I can't look at this SPY daily candle as we close today and be like, that looks like my lower high. I can't look at it and with that degree of confidence. If we closed on lows, if we closed at 662 right into the ADMA on the daily chart, I'd be like, that is something that is worth noting, that we're setting up to, pull back further, I think, during the week. So we didn't get that close. We still closing highs. So I would say that for tomorrow's trading session, the first places I'm going to be paying attention to are basically today's high and today's low. If you get above today's high at any point this week, then again, we are back in full on bull mode. You had a little bit of a challenge trend here at 655, but we are now making new highs. So the uptrend is fully intact. If you can get below today's low tomorrow, ideally, the day after that, okay. As long as you don't, get above today's high first. If you get below today's low soon, then it still would potentially confirm this as the possible lower high for the market. So that's the main thing that I'm going to be paying attention to from the perspective of the S&P. We got our update from Citadel Scott Rubner today, and then Tate was giving us some pretty good information here from the vol control funds and the systematic funds. There's no real updates on any of that. The positioning risk is still, at least from the systematic side of things, the risk is very much to the downside, but it's been that way for a few weeks now, and it can't. Like, we had a little bit of a pullback last week, like 1.3% from closing highs to closing lows, something like that. But that's not enough to actually trigger the Scott Rubner statement from not this last note that he just put out today, but the note before that, the Scott Rubner statement that I've been quoting of, if we can go down a little, we could go down a lot. And again, that just comes from systematic positioning. But the pullback last week was minor in nature. It just was not enough to get us there. The only thing that I think was notable about the pullback last week, and to some degree, the weakness that we saw intraday today, is that for the first time since the low in April, we are seeing some selling coming in the market without a catalyst. Up until the low in April, I mean, this has been literally the strongest, most resilient stock market I have ever seen in my entire career. This has not been a market that it's barely been an uptrend. I mean, it technically has been an uptrend. You get higher highs and higher lows in here, but it's barely been an uptrend, because if a market is straight up, it's not an uptrend, right? If a market is straight up, it's momentum up. And that's not what this is either. This is an uptrend, but the pullbacks that we've gotten, if you can even call them that, have been so shallow. They've been 1-day pullbacks, 2-day pullbacks, and they've all been event driven. Bad economic number comes out, bad employment number comes out, and we have a down day for a day or possibly two. I feel like last week was the first time that we saw selling for the sake of selling. Nothing new came out that was necessarily good or bad. Last week was actually a pretty slow week from the economic perspective. But we saw, 2.5 days of actual real intraday selling coming into the market. And today did feel like a little bit of the same. It felt like we had an opening positioning squeeze, particularly with the AI names, particularly with the NASDAQ names. But once that opening positioning squeeze was over, and this was exactly what we predicted in the morning meeting today, we kind of went back into that bleed out to the downside, not major selling, but more sellers than buyers to grind us lower for most of the intraday until we seemingly kind of rallied into the close on the MOC buy and balance. Excuse me, the MOC buy and balance into the close. So that's really where we're at. I think from an index perspective, a lot of the sell-side research that I read over the weekend was all saying the same thing about expectations of a little bit of a further bleed out in the AI trade, and that is the number one risk to the market right now. Yet what we saw today was very, very much the opposite of that. What we saw today was, a sell down in the RGTIs of the world, sell down in the Ion Qs of the world. Some of those names that have been super squeezy recently got hit down, and they just bought up the AI trade again. Uh, though I don't know. Looking at Nvidia, it's like obviously they got Nvidia above 180. 180 was the level we discussed. We said in the meeting today you could be long Nvidia versus 180. I don't know if anybody grabbed that trade. That was a pretty good trade. You had to buy it pretty much the second the market opened. Incredible momentum move on it, but it wasn't sustained. So I don't know. Nvidia is an interesting one here because you have another upside tail today into that same resistance that it can't break out from, but you didn't close back below 180 either. So we'll continue to monitor this. If Nvidia, and this will probably move to some degree hand in hand with the market, hand in hand with the Nasdaq. When you go back to the market analysis they just did about the next couple days, today's high and low is what matters. Well, Nvidia being the most important stock in the stock market right now, today's high and low matters. Because if you get above today's high in the near future, you're getting above this tail high and you're breaking out on this daily chart. You break out on this daily chart, watch out. I mean, this thing, I mean, the technical continuation on Nvidia here would be $20 on the upside, so you're looking at a move to 205 on a real breakout here. If it gets back below 180 quickly, then this thing goes right back into the penalty box. And I've been saying that Nvidia has been relatively weak for some time, but relatively weak in a market that only goes up means that you don't necessarily go down. But so 180 is going to be really important in Nvidia, and the 180, basically today's high, 184, is pretty important in that one going forward. So that one was interesting because they squeezed it in the beginning, but they didn't continue it. AMD was kind of similar but different. We keep noting the importance of 165. Today AMD got out to 164.30. 165 is the level that I think is a buy trigger for AMD. If it's able to get above that, it's breaking out, it's possibly squeezing. But it's also been a little bit weak and can't seem to peek its head up above that. So they tried to squeeze AMD in the beginning of the day as well, and it just could not go. But you know what they did squeeze today? Why is absolutely beyond me. They once again continued to rip these names that are these more commonplace stocks that I guess are somewhat related to the AI trade, that have just been on fire. I mean, SanDisk today, with no new news that I'm aware of, up 18% on the day. Just crazy. I really thought that this pullback here was going to be more. We had the close on lows on Thursday, despite the market closing well. I thought this thing was going to pull back to 90 or the upper 80s. It did not do that. And instead today just squeezed to new highs up 18%. WDC at least had a price target increase today, from some analysts that's chasing upside in this. But same deal, as WDC barely pulled to the 80 MA on the daily. You didn't even get a close below it, and they made new highs. STX was the weaker one, and it still closed like kind of well. They tried to rally this thing into the close. So they still are ripping those names. LRCX is another one. Interestingly enough, LRCX is the one that had a genuine upgrade and traded like crap today compared to SanDisk, WDC, STX. Separate but different. They squeezed APP off the open again today. Just another one that's getting out of control. When did that short report come out in this thing? Was that back here at $305? Oops, sorry. Hopefully they bailed on that short report. Um, Hood, I think yeah, Hood also there. So there's still some real pockets of some names that were just absolutely on fire. And for WDC, which got a price target increase, I guess I get it a little bit off that. For LRCX, the upgrade, I get it, but Sandisk up 18% today. I have no idea. Kind of mind-boggling to me considering the move that it's already did, especially when they ended up selling down Nvidia and AMD off of their opening rip. It's like they sold those down off the opening rip, but they did not sell this name, which has just gone completely bonkers. Yet there are other spots out there that were really relatively weak. Again, your RGTIs and Ion Qs had big pullback days today. The Solar Edge that I've been involved in, that I've been looking at, had a big pullback lower today. With this stock, uh, Quad U here, Quad U, which just actually got hit a little bit even while I'm talking. Uh, Sorry, is there news out on this Quad U? Just get some bids in real quick. Some short this thing. Oh, speaking of this Quad U, the call of the day today was USAR, which I didn't take. I don't know if anybody got it. This play has been so consistent. This play has been so consistent. I went over it in detail in the morning meeting today. We have seen this happen over and over and over with these meme stocks when they buy out another company. This play has been so consistent. Traditionally, what happens, to remind everybody, when a company buys out another company, the company who is doing the purchasing usually goes down, and the company that's being bought out, assuming it's a public company, goes up, right? And the reason for that is because the company that's being bought up is usually being bought out is usually being bought out for a premium, almost always, so it trades higher. And the company that's doing the buying, even though it will probably benefit that company in the long run, it usually hurts them in the short run because they have to lay out a lot of cash and or dilute their float. And in the case of this USAR, it looks like it's both. They're laying out cash and they're diluting their float for their buyout. So traditionally, when what's the ticker for Quad U? UUUU. So traditionally, when a company is buying out another company, the company that's doing the buying out gaps down. You get a nice juicy gap down on that. And there's no way you can know that in advance, and the trade is difficult because, did they overprice it in with the gap down, etc. But what we've been seeing recently in this market, because this market's become just so brutally frothy, is that when these meme type stocks are doing a buyout, the Robinhood traders that are out there, the Wall Street Bets people or whatever, are usually they're buying the stock up on that. So like this USAR went for like $19.70 or 75 cents pre-market, and I don't remember what the other ones were, but this is like the fourth one of these that we've seen in the last 3 or 4 months, and every single time the trade has worked, and it's been great. They rip it higher when it's supposed to gap down because they're the company that's doing the acquiring, and then they sell it down all day because that's what's supposed to happen. And that's exactly what happened here again on this USAR. So I really think that this was the trade of the day. I didn't take it; I just had too much on my plate. But we discussed in the morning meeting, so I hope somebody caught that. UU Energy Fuels announces a proposed $550 million offering of convertible senior notes due in 2031. So, brief little downtick on that. Not as bad as a secondary offering for the stock because they're doing it through convertibles, but still will probably hit the stock down. Okay. So, that is all that I've got. I'm happy to answer any questions that any of you have. I'll start with the VTF, then I'll check out the YouTube, kind of like always. Um, yeah, so Tate gave us some great information right as we were going into the afternoon meeting that I think was worth reviewing, along with some of the Rubner stuff really quickly before I answer questions, just because now I'm reading in the VTF what Tate had posted. So Tate gave us the vol control positioning chart and basically said it's the highest it's been in 5 years. So I'm just going to read this out loud. Higher volatility on its own doesn't inherently mean lower markets, but the forced selling it could spark from systematic funds certainly poses a risk. Notably, a 2% down move could trigger as much as $47 billion in net deleveraging from vol control strategies. And that would need to be intraday, by the way, as these funds mechanically sell into rising volatility. Additionally, CTAs are at a significant risk of rolling over after stalling at a 5-year high in equity exposure. Combined, these structural weak points could drive a substantial amount of convexity towards the downside. On the flip side, there's been little scope for more length, with even a 0% average move. That being said, this has been the case for a few weeks now, and it won't matter until it does. And this is exactly what I've been talking about for a few weeks. And look, I've really learned over the course of my career, over the course of the last like 5 years that we've been really paying attention to this information. When you start to see systematics at full exposure on either side, you don't want to be gung ho against that. So again, what Tate's showing here is exactly what we've been saying. If the market can go down a little, it probably goes down a lot, but you need to actually trigger that. The vol control selling, if that could knock into the CTA trend following selling, it could be massive. And then you combine that. Let me see if I still have Scott Rubner's note up from his new note. I do. The new note from Scott Rubner also doesn't have a lot new in it because I don't think anything has really changed from a market dynamic perspective in the last couple of days. But the two things that I think are just worth noting are one on the volatility dynamics. Equity vol is no longer heading lower. So first of all, we did see a VIX divergence again today. We had the VIX up with the market up. Nothing extreme, but this is kind of keeps happening, and this was happening right before the high that we had last week. So maybe it leads to something tomorrow. Maybe it doesn't, but it's certainly notable. But hedge funds, large specs are extremely short the VIX. The takeaway is crowded short volatility trade equals asymmetric risk if shock emerges. So you do have a degree right now with the VIX where if the VIX can move higher, this thing could really, really, really squeeze up. And I want to remind you guys, back in August of 2024, where what did the VIX get up to? 65 or something like that? Let me try to find it. Yeah, 65.73. And the market had this insane 3-day sell-off. This move here, I don't exactly know what the VIX positioning was going into it, but there is some degree of rhyming and echoing here with the combination of the systematic exposure and the VIX charts that we just mentioned in Rubner's note there. There's some degree of rhyming here with what happened back in August. And by the way, that's one of the best things to make the market move up in the bigger picture. Let me just start by saying that is if when you can wash out all the systematic positioning, eventually that becomes buy flow again. And that's like what leads to, I think, new healthy highs. I don't think that the new highs that we are seeing in September are healthy. But if you could wash out positioning and then you get new highs, those highs in my mind would be significantly healthier. That's why I've been kind of fighting this rally here a little bit in September, albeit to my own detriment. But I've just seen it so many times over the years that when you've got a chart like the one that Tate posted, or you got some of the information about the VIX or what Rubner's posting about the systematic positioning, you got to be very, very cautious about being like 100% long because you could wake up to an August 2024 at some point in October. It is not outside the realm of possibility. I would love it actually. If anybody was trading with us back in August of 2024, that gap down on that third day lower, we were screaming from the rooftops that you got to buy it. And I went maximum 100% BP on the long side on that day. And we had a huge rally back from there. Obviously, it worked out very, very well. So wanted to note that from the Rubner note, and then the only other thing I wanted to note is basically in line with what Tate's letting us know here from his information. Systematic positioning is full but fragile, right? And basically what it says here is what we already know, which is that Systematic positioning remains elevated, but there's no unwind trigger. And I assume when he says that, he means that there's been no unwind trigger that's been hit, right? But the positioning is fragile, and this is what I want to highlight. Shallow pullbacks risk turning into larger down moves. I think that that there's going to be a time here soon. It has to happen soon. If we get to late October and it hasn't happened, forget about it. November has too much seasonal bullish, and we get the buyback that comes back in and all that fun stuff. But um, I think what's going to end up happening, we just saw also in that rumor note, I'm not going to go and find it, that retail money had a huge week of buying last week. Retail money thinks that the dip that we had last week is like the dip that you want to buy. And there's going to be a point here where they're going to try to come in and buy a 1% down move and get smoked on that, because it'll be the down move that triggers the VIX to spike. It'll be the down move that triggers the systematic sellers to come into the market. And if you get that to happen, you're not going to stop at 1.5% down. You're going to see probably at least 5-7% downside. We have to see how it happens when it happens. Is it like in August 2024 that was fairly an anomaly? You don't see that happen too often, but if you got in August 2024, that could wash out everything in 3 days, and we could be looking to massively buy that dip once everybody else who tried to buy the market as soon as it was down 1.5% was getting run over. So we got to see it as it comes, but there is still a lot of risk to the downside, but you have to actually trigger it. That's the biggest thing. Kate also letting us know that Goldman gave us, and I haven't seen this. Tate, do you have the CTA trend following trigger from Goldman too? They usually release it with the same note, but basically CTAs over the course of next week per Goldman, and a flat tape are buyers of the systematic community. The flat tape they buy $700 million worth of stock, basically nothing. And an up tape they buy 0.3 billion, basically nothing. And a down tape this week they would sell 6.3 billion. Over the course of the next month, they basically have nothing to buy. In a flat tape they buy 0.7 billion, and up tape they're sellers, and in a down tape they're sellers. 23 million and 23 million, so basically nothing. And 58 billion respectively. So they would even be small sellers into an up tape now, which is pretty crazy. You almost never see that from them. Cool. So yeah, thanks for providing that. The bias for vol funds to be sellers is because the 1 month and 3 month lookbacks are near the lowest we've seen post pandemic. Yeah, because we've seen it on the way up, right? And you can see it in the lookbacks. You've barely had a day exceed 0.5% in this market. All right, scrolling through here on the VTF. Yeah, and I would say, the whole gist of that Rubner note is generally bullish, right? And I agree with it, particularly into the end of the year, that November, December period. I would just love, we just can't get the washout that I actually think would make the next leg higher healthy. Like going up when you've got full on systematic exposure like this, we know it can happen, guys. We've seen it happen in the past. I always like to point out, most of the time when the systematic exposure gets this full, it ends up unwinding like kind of relatively quickly, I feel like. But I remember, I think that was also in 2024. Yeah, this March February period of 2024, where by the end of February we had full systematic positioning, and the selling didn't start until the beginning of April. So a month and a half. Because if you didn't trigger it, it doesn't matter. And this current environment, I feel like we've been that way probably since the end of August. So it's the same thing. We've got a full month here where this market has continued to follow its trend and continue to move higher. but I think that the risk is to the downside here in the same way I thought the risk was to the downside there. And then I love to use this as a case study because I even think that the pullback, if we get a pullback in like, this late September, obviously tomorrow's the last day through early October, will be more similar to this pullback, rhyme with this pullback of April 2024. Almost like if you, let me zoom in here really quick on this chart. Like if you analyze this top before the pullback here, it's kind of similar to how this price action is. Look, yeah, like this 3 day pullback, like kind of 3, 4 day pullback here. Reminds me a little bit of what we had last week. Then you had a bounce back. You had kind of like equal highs here. Then you rolled back down a little bit, but there was nothing too insane. And then you triggered through a level of support. Keep in mind, our uptrend has not broken a single level of support since forever. And then that's probably when the systematic selling started to come in. And then you had more violent selling that lasted for 5 days. And then that was it. You washed out probably some of the systematic positioning, and then the market was able to bounce back, continue, and make new highs in a healthy manner. Like, you almost could see like this being a repeat. Instead of this being the end of March, this is the end of September, and then this being October, and then next thing you know, by November we're making new all-time highs. So I don't know. It still continues to be what I'm looking for, but I'm also, like I said, paying attention to the technical signal. Can we get the lower high here, similar to what I was just rhyming with last March? Um, yeah, I don't know. I'm not fully sure what is meant by that statement either, Varun. All right, let me go over to the YouTube and see what's going on with those people in there. From Apex Joy, do you think that gold still has more upside? Yes, I do. I think gold looks phenomenal. Gold is just benefiting from everything right now. Market goes up, gold's continuing to move higher. If the dollar gets weaker, gold's going to move higher. If the Federal Reserve is further compromised, gold's going to move higher. If drama accelerates with Israel, Russia, whoever, gold's going to move higher. The trend is there. There's so many structural reasons to be long gold right now, and the trend looks great. Things totally broken out. I think it looks good. And you're also asking me, not aware what caused BKKT up 45% today. Me neither. I didn't see this until you're bringing it up right now. Anybody in the VTF have anything on BKKT for Apex Joy in the YouTube on why it went up? Varun says, yeah. It's Mike Alford. Oh, Iron? So the guy Mike Alford from Iron went on to the board of BKKT, is that what you're telling me? Got it. Well, okay, there you go. Thanks, Varun. All right, anybody else have anything? Anybody out there going once? Going twice. Again, I'm not going to be streaming an afternoon meeting on YouTube tomorrow because I'm flying to Charlotte. If anybody's in the Charlotte area, shoot me an email. Here's Tyrone sneaking in a question in the YouTube. Looking for some guidance. Reading the level 2 subtleties for buy and sell signals. Do you know any drills or exercises that I can do to improve the skill of reading the level 2 in the tape? Yeah, so learning to read level 2 is very difficult. Just generally speaking, the way that I was able to learn to read the level 2 is because I sat around when I first started my trading career, guys that were really, really good at reading the level 2, and I just listened to them speak for years while following along with what they were talking about. So there's a couple of things that I can say. The first thing I would say to you is, um, and I don't think you've been following along with the group or the team too often. So guys who've been with me for a little bit have heard me say this before. Um, Tape reading is a skill that I have because of how I grew up in markets. Like the way that I grew up in markets, There was a time in my career in the beginning where if you said to me, you can only have tape or you can only have charts, I would say, get rid of my charts. I don't need them to make money. I just want tape. I can make money just with the tape. I don't need anything else. And that really changed in like 2013. The structure of the market sort of changed. The algorithms became more sophisticated, and there became more fake liquidity and fake information in the level two than there ever was previously. And that still remains and has probably even improved further to the present day. So my recommendation to new traders is to not worry about the tape. Most likely trying to learn to read tape is going to cost you more money than it's going to make you. And some of the guys who are veterans in the team who've been trading for a very, very long time will pay me the compliment of saying that I'm the best tape reader that they've ever met. And I'll be the first to tell you that my skill of tape reading is fairly useless the vast majority of the time now when it comes to trading. Not 100% of the time. It's still useful sometimes. It's useful trading after hours, particularly if you're trading earnings names after hours. The tape trade's a lot more pure because most of the algorithms turn off because of the event risk combined with it being after hours. So you have a lot more like human beings in there and it makes it a lot more readable. And also just in certain news situations. And then finally, it can be a little bit beneficial just in terms of trading execution ability, recognizing if you've got a bid at 72 cents and there's a refreshing buyer at 75 cents that you probably need to raise your bid from 75, from 73 to 75 or 76 cents. Um, but for the most part, there's so much noise in the depth and the level two that I think really learning to read charts is where you want to start. But if you're at the point where you want to learn more level two, it is one of the more difficult things to learn because you can't really learn it in the way that I did, where you're on a trading floor with people who do it really well anymore. The best way to do it is to probably record your level two, and then you need to be able to learn some basic things, and then go back and watch the recordings in slow motion and try to learn from it. The big things that you're looking for are natural buyers and natural sellers in the tape and how they're buying and how they're selling. So, for example, refreshing buyers and refreshing sellers. That's a big thing. So you want to learn to be able to read like the really big buyers and sellers in the tape who are really moving the stock. They're going to do everything they can to hide what they're doing. If you need to buy 1 million shares of stock, you're not just going to put a bid out for 1 million shares anymore. You're going to use refreshing orders and different methods in order to be able to disguise that size. So you need to learn like what a refreshing order is, how much is the display size in the refreshing order. Almost always, by the way, it's 100 shares, but once in a while it's not. And then learn to read what venue that refreshing order is buying on. And then you need to see if you see a refreshing order on the same venue at different price levels, you can begin to identify that there's a large buyer or seller who's actually working the order. Most of the time, those institutions go back to the same venue. That hasn't changed, and that's still a big tell. So if you see the really large ARCA refreshing buyer at 13 cents and you get hit really, really hard, he might pull so that he can buy at a lower price. But then you see the large refreshing buyer coming in at 5 cents, you know it's probably that same buyer. Or the opposite. He's buying really hard at 13 cents, and the whole market moves up. And he then raises his bid to 20 cents. And then you see same thing, that large refreshing buyer coming in at 20 cents. In the first example, that is the buyer who's buying a large order, recognizing the selling pressure, reducing their price to be able to buy at a better price, but the buyer's still in existence. The second is the market is moving up away from him and he's having to chase that price higher, but you're still recognizing that buyer is still there. And that's powerful information because you want to try and recognize when that buyer is driving things up and you can buy with him. Or sometimes if things they get silly extended to the upside, and then you identify that buyer when things are really extended, that buyer breaks. It could be a little bit tricky because you don't necessarily know if he's not going to come back at a lower price, but you could then short or liquidate your long position into the break of the refreshing buyer at the higher price because he's probably done. And that's a lot of what you're trying to read in the tape. But generally, I think that you want to be trying to read charts more than you read tape. I think that that's where the better money is at this point in time. So hope that helps, Tyrone. Thank you for the question. Steven wants to know if I got any thoughts on silver. So silver's running now too. Silver seems like it's playing catch up now. I don't like silver as much as gold. I like to own the leader as a general rule. I've learned that a long time ago in my career as well. Own the leader. Gold is the leader, but silver really is starting to play this catch-up trade, and in some regards, silver can be a little more volatile. So silver can pick up pace really, really quickly. All right, let's see if there's anything new that was here in the VTF. Looks like we got through it. JD Vance just announced we're heading to a shutdown. I don't necessarily think that's bearish to the market. Is the market reacting on that? Not really. We're down 68 cents from the close in the SPYs. So we'll see where we open tomorrow. Have a wonderful night, everybody. I will see you then.